Hello guys, welcome back to the channel and to a new video. I'm really excited about this episode because I'm gonna share with you something insanely valuable. Alright, I'm gonna share with you my personal A+ setup. This is not just an A+ setup, this is an A++ setup with an insane win rate. Alright, whenever I see this setup forming, I risk more than usual. I put double the risk. At minimum, I put 1.5 the risk. For example, if I'm usually risking 1% per trade, when I see this setup, I risk 1.5%, I risk 2%. Sometimes I even put 2.5% risk on this setup. And you're gonna see it has a simple logic. It is easy to follow, alright? And the frequency of this setup is dependent heavily on the time frame that you are using, but the moving parts are very little, alright? And you're gonna learn it by just watching this video. So let me give you a spoiler first of this setup, alright? And you will realize that this happens all the time. And after that, I'm gonna show you the logic and then show you examples that I have collected. And when you finish with this video, tomorrow you're gonna open the chart and you're gonna see it by your own eyes and how easy it is to spot and the win rate behind it, and it has a decent RR. Alright, so enough talking, let me show you the spoiler first. Look for something here. There was a setup from today. Alright. You see this one right here? This candle that traded back to this imbalance and then we rejected from it. It has something to do with this. We have another one right here. Okay, so now let's talk about the logic of this setup. Now, in order for you to spot this setup, you need at least 2 time frames. All right, now there is no specific time frame, but you need a combination. For example, you enter on the 1 minute and you base your trade on the 15 minute, the 5, the 10 minute, it doesn't matter. Let me show you how it looks like. Suppose that we have 2 time frames here side by side. Suppose that price is trending to the downside here. Alright, we are printing lower candles here, consecutive down close candles, and we are in a momentum. All right, we can all recognize a momentum when you have consecutive down close candles or the candles are bigger than usual. All right, you can spot that with your own eyes. All right, you don't need any technical analysis or indicators for that. So what we're looking for is this pattern right here. This right here is on the 5-minute time frame. So what can you see? Price is printing down close candles, and then we have an up close candle that traded to the imbalance. All right, we are trading on that imbalance. And how do you know that the price is really in a hurry to reach some objectives to the downside, and it's going to continue this trend with momentum? It's not going to just stop. When the up close candle, all right, this one right here, or the green candle, it starts trading to the upside, so it's offering a pullback, and once it reaches this imbalance right here, right, so for example, it's trading to the upside right here. This is real time 5-minute candle, and suddenly it starts rejecting. All right, we start rejecting from this imbalance immediately. All right, and we create this wick right here. So ICT traders call this I believe institutional order flow entry drill. I don't know, some sophisticated name, but when price trades to the upside, hits this imbalance, and immediately we see this rejection right here. This right here is a strong sign that we're going to continue the trend with momentum. All right, this is especially when you have something to the downside here. It can be an imbalance, it can be a high or a low that we still have targets. So basically we still have targets to the downside. This right here is a strong sign that we're going to continue for that, and we're going to continue with this momentum. So This is what you want to see. So this is what you want to see on the time frame. I don't know what time frame. So if your execution time frame is the 5-minute, you want to look for this pattern on time frames like the 15, like the 30-minute, like the 1 hour. All right. And this is the first part or the first piece of the puzzle. And let me give you the second thing and what you want to see on the 1-minute time frame. Now, this right here is the execution time frame. All right. It doesn't have to be the 1 minute. So in my case, it is the 1 minute, sometimes the 15-second, sometimes the 30. I'm flexible with the time frames that I execute from. So basically just replace this with whatever execution time frame you are using. So what do you want to see in this time frame? So this what you want to see on the 1-minute time frame. I didn't draw the whole candles right here. It's going to take me forever, but this is what you want to see. Price traded to the upside and took a high. All right, this right here, or the high of the or the low of this imbalance on a time frame like the 1 minute, you're gonna see it, or you're gonna see it as a high, right? Like this, with or a swing formation or an obvious high. All right, for example, it's gonna be something like this. All right, like this, an obvious high. All right, so this is what you want to see. What you want to see, and you're looking at this right here, the 1-minute time frame and the 5-minute time frame. All right, and you want to see this. All right, you don't want to see closures here. You don't want to see price printing more candles in this imbalance on the 5-minute time frame. No, you're looking at price on the 1 minute. Price is trading above this high. All right, and it sweeps it. All right, so we have a sweep here, and once we have that sweep, immediately we have a rejection to the downside. And at the same time, you want to see that candle on the 5-minute rejecting heavily to the downside. All right, so basically in a strong trend, price does very short and sudden pullbacks. So just one candle trades to that imbalance or whatever, and then immediately we have a rejection from. All right, and here you want to have a structure shift. You want to see an imbalance getting broken, whatever, but be careful here. Price is going to explode or melt to the downside. All right, you're not going to have a lot of time to enter from, and when you enter, this right here is at least, all right, your TP should be at least here. All right, and this one is going to represent the low here. All right, so this is the logic of this setup. Extremely easy, but I'm going to show you examples now, and you can understand better how this works. And let me start with a fresh example that happened just today and with the trade that I took. All right, so I want you to notice the left side, and this is the 1 minute. Again, here there is no specific time frame, but you want to look for the 1, the 2, the 3, and look for that imbalance and wait for it for price. When it reaches that, it pulls back to that imbalance, and then watch and observe the candles and how they react. All right, you want that first touch into the imbalance and immediately starts rejecting. All right, for example, here on the 1 minute, you can see that we have printing this down close candle. All right, and we actually have a reason to trade to the downside, and the market structure is obviously trading to the downside. So this is not just, so you don't look for this pattern anywhere. All right, let me give you the context first of all of why I'm expecting a bearish move or this move to continue to the downside. So if you go to the 1 hour right here, first of all, we were here. All right, we had this move to the downside, and then we traded to the upside, and this is the 10 a.m. news. All right, if you go to a time frame like the 30, all right, we have bunch of imbalances right here, and I was looking for price to trade to the downside and even to here. All right, so we had a reason to trade to the downside. So market structure, is it supporting this idea? Yes. If we go to the 15-minute, we traded to the upside, we swept this, and then we immediately seen a rejection from it. All right, you can see here, beautiful. We break this, we start trading to the downside, and we have these imbalances right here. So we actually have something to continue for. All right, now this is just a simple context. You don't have to use so many advanced analysis or whatever, just an idea in mind in your higher time frame, and then let this 2 time frames do the heavy lifting. All right, as I said, you want to see that return back to that imbalance, and immediately we start seeing rejections from here. And what you want to see on the time frame that you want to execute from is this: price hit to the upside and it took the high. All right, a high, an obvious high. Here it was, and you can see that this high right here, it is not actually the low of the imbalance. The low of the imbalance is here. All right, but the high, it was here. You can see it was inside the imbalance, and this is what you want to see. Price takes a high, and you are watching the 1 minute time frame above you, and you can see price rejecting from it. For example, you might see closures here on the 1 minute, then go to the 2 minute and look for that exact same thing. All right, if the 2 minute is still offering those rejections, then you're still good. For example, here this candle opened here, all right, returned back to the imbalance and immediately started rejecting. This right here is a powerful sign that we're gonna trade to the downside, and we're gonna trade with momentum. All right, not just the move to the downside, momentum, meaning you need to be careful with where you place your entry. Price is gonna leave without you. You're not gonna have drawdown. All right, and look at here on the 5-second. All right, this happens all the time. We traded to the downside, and once we broke this, I took the entry, and look what happened. On this candle, we returned back to this imbalance and immediately started rejecting, right? And look what happened. A powerful move to the downside. All right, again, here for example, we were trading to the upside. This candle returned back to this imbalance and immediately started rejecting. Immediate rejection. And look what happened. 2 strong candles to the upside to take this high. All right, that means that here if you go to the 1 second, if you want to take it further, and going to the 1 second, we can actually have a setup right here to take price to the upside. Same here, if you go to the 1 second, we can find a setup here to take it lower. And just above us, I missed a setup that is exactly identical to this one right here. So look what happened on the 3 minute time frame before this setup presented itself. We have down close candles, right, strong candles, and we have this small imbalance right here, just a small one. This candle returned back to it and we started having rejection. All right, immediate rejection, no closures, and then we continue to the downside. So let me draw this right here. All right, so that's the imbalance, and look what do we have. Returned back, we swept the high right here. All right, we swept the high, and I was looking for this imbalance to get broken because I saw that price found support from it 3 times. So I was waiting for this to get broken, and it was actually on the 15 second. Let me show you. But you can see the problem is that price gave me absolutely no chance to get in on this trade, and I was waiting for this right here to return back to here and take the entry, but I noticed that there is an identical setup going on right here, so I took this instead of waiting price to give me a pullback. Again, this right here will not give you the chance to enter, so you need to be extremely fast. All right, same thing here, return back to this imbalance, right, and we start seeing this rejections. All right, the moment we touch the imbalance, we see a rejection again. This indicates that the momentum will continue. All right, and of course you need something on the lower time frame to confirm that. So let me show you more examples of this. And here's another beautiful setup. All right, and I was away from charts at this time. It was late during the day. I don't usually stay till the last hour of the trading day, but this was a textbook trade. All right, you can see on the 2 minute time frame. So all you have to do to make things easy for you is to stick to your execution time frame and look for potential imbalances that price can tap into, like I showed you, and then look for a low, all right, also a low that can be taken. For example, the low here is the low here right here is the high of this imbalance, but like the previous example, that high, it was not the low of the imbalance, it was inside that imbalance, all right? So it can be, there are two variations from here, but you can see here that we start trading to the downside, all right? We took this low right here, all right? At the same time, we are dipping into an imbalance, and you can see the moment we tapped into it, we started having rejections, immediate rejections, all right? Again, this is a good sign that we're going to continue in a momentum, strong momentum, all right? So first time rejected, one more time. So this is why you shouldn't buy from this directly. Maybe you see this rejection and you might say, all right, I'm gonna buy this and put my stop loss below this low. No, wait for a shift in market structure. All right, so you can see traded to the downside once, heavy rejection from this imbalance, second time, and you want to get your confirmation from here. So what do we have? This was right here. I don't remember what was it. I think it was an imbalance on the 32nd, but nevertheless, you can see that we have a market structure shift on here. We also closed the imbalances all on the 15-second. We have a beautiful pullback, and you can see prices exploded to the upside. We have another one right here. All right, you can see it here. And here you might see, all right, we have closures. We have closures here, not the kind of setups that I told you to look for, although we have everything aligned here. But if you go to the 4-minute time frame right here, all right, so this was the first one, and you can see that rejection also. You can see it on the 4-minute, and also we have that imbalance here. Let me show you, let me draw it so you guys can see it, and you can see that this candle traded to it, an immediate rejection from it. So here's the rejection, all right, so you can see it better. This is the rejection. So this is why I told you don't stick to only one time frame. Look for this tap, an immediate rejection on different time frames above you, all right? And you can see that it happened also here. We traded to the downside here of this candle. It opened, traded to the downside. It tapped into this imbalance, and we start having those immediate rejection. So here inside this wick right here, all right, you want to look for a market structure shift here, something that tells you that there is breaks, all right? For example, here there was this imbalances getting closed, all right, or inverted, whatever, and you can see we returned back to them here, and then we traded to the upside. Although this was late during the day, but still the same concept, all right? So let me show you one more example, and then we're gonna wrap this video up, all right? And going through the last example of this video, all right? And guys, these examples are from the past 5 days, so it happens a lot, all right? But you need to get used to it, you need to backtest it, and in the next video or the video after the next, we're gonna do a backtesting session, and we're gonna start looking at this particular setup, all right? So in this example, this is a 2-minute time frame, and I chose this example for the following reason. First of all, let's talk about why we are expecting higher prices, all right? So the context, very important. If you go to a trading view, this is the move. We have a heavy move to the downside, and we swept these lows right here. Now, why I'm using this low and not this and not this and not this? Because if you go to the 2-hour time frame, all right, or you can go to the 1 hour, whatever, we return back to this imbalance right here, and then we start seeing a rejection from it, all right? This imbalance, and you can see the same concept that we're using on the lower time frame, you can use it here. So this is a multi-time frame setup. You can swing trade it, whatever, scalp it, This is entirely your choice. You can start looking for those longs. All right, and also you can see that after sweeping each low right here, we didn't have a real breakout structure. So after sweeping the low from here and touching that imbalance or tapping that imbalance, because there were imbalances also here on the higher time frame, like the 1 hour, multiple ones, but after we tapped into this and swept this, we have that a breakout structure right here. So it tells you that this might be the last down move or manipulation, and now we're gonna trade to the upside. All right, so again, if we return back to Ninja Trader, so here's that move, here's that breakout structure, right? So we tapped into, or we start trading to the downside and tapping into the first imbalance here. All right, but you can see that we have absolutely nothing. So maybe you're looking at here and you're looking at this low, you're looking at this low, all right, and it was also aligned with the first imbalance, but you can see that the lower time frame gave you absolutely nothing as a confirmation, and we kept trading to the downside. All right, so we closed above the first imbalance, but look what happened on the second imbalance. We tapped into it and we started having immediate rejection. All right, on the candles themselves, one here, second returned back and start trading to the downside. All right, so price couldn't stay at this imbalance. All right, it offered immediate rejection, and here you have the breakout structure. You can take this, all right, or maybe you can wait for the bigger imbalances here to get violated to be safe, whatever, but the same concept apply to here. So that was the setup in general. All right, I showed you multiple cases where the low or the high that we want to sweep, for example, it was, in this case, it was this one. All right, where it can be the high or the low of the imbalance, or it can be a part of the imbalance. I showed you a variation where the first imbalance here got violated or traded through, or price closed outside. All right, but then it returned back to this imbalance, and it was the one that immediately rejected price. So we want that return and then immediate rejection. That's the key to this. And then on the lower time frame, you want a break of structure or whatever to take price higher. All right, now of course you need context with this. You need to build the context first on the higher time frame, and you have actually a reason to trade to the upside. So what happened before in order for you to believe that price is going to reject you this from here, it's going to print that structure shift or whatever, and it's going to trade to the upside. So do we have something on the upside? All right, if that part is not obvious for you, simply skip or stop trading or close the chart until it is obvious. All right, so don't go to the lower time frame and try to understand price while your higher time frame is a mess and you have no idea where it want to go, because in the lower time frame you're going to see multiple signals, buy signals, sell signals, all right, and you're going to be lost. All right, so this is my personal setup that I trade with every day. I have other variations or other setups that have the same core concept, but this one right here, this exact formation, I put more risk to it because I trust it, I have confidence in it that it will deliver. Now, as I said, I might do some trade breakdown videos where I take setups like this, all right, similar to this that I showed, but I'm gonna do a trading or a backtesting video regarding this week or the weekend maybe. So if you have any other questions, you can always DM me in my Twitter account or leave a comment down below and I'll answer you as soon as I can. Now, happy trading and good luck.